Actually holding on to the green line. The Sensex is up about 800 odd points. It's quiet, and quiet is good after the volatility we've seen in the last few days. So it gives us some time to talk about some numbers. Escorts Kubota was a weak quarter. The revenues actually declined. There was a slowdown in the tractor business. Their construction and railway business were not bad. It was stable for the quarter. But importantly, the management in the conference call gave a very muted guidance for the full year. Bharat, Madan, the whole-time director and CFO of Escorts Kubota, joins us now to talk about that. Sir, thanks a lot for joining in. You know, the slowdown in the tractor business is clearly visible. FY24, your tractor volumes were down for the full year by about 7.5%. You said demand in Q1 is expected to be weak. But can you quantify for us, in the first half of the year, how much could your volumes fall?
Hi, good morning, Sonia. So I think we are seeing this weak trend now after the last monsoon. So third quarter also had started showing the signs of decline, and fourth quarter we saw the decline was slightly steeper at almost 18-19%, where the industry went down. So this quarter also we're seeing the softness, even though April was a month which was more or less flattish. 1-2% degrowth was there because the festive season shifted this time to April. So that actually reduced the impact of the drop. But otherwise, the sentiments were not very strong on the market side. And then coupled with the election scenario, I think some demand has been injected. So this quarter, we expect, I think it will be a soft quarter for us. So we still expect to be a single-digit degrowth, which will happen in the industry numbers. So May, June may still see a slow growth. I think going forward, once the monsoon starts, if the pickup is good and distribution starts, maybe the sentiment will start improving. So July, August, maybe more like flattish month. September onwards, we'll see the pickup start happening, if we really see a good monsoon this time.
Okay, so you're saying a single-digit degrowth is what you're expecting in Q1, and the sentiment is still not strong in the tractor market. Got that. So, do you think that with this degrowth, there could be a sort of a compression in margins as well? So far, you've been holding margins at around 10.5 to 11%. I think in this quarter, you saw 11.2% margins. And you did mention there are some cost efficiencies that you're undertaking. But do you reckon that with this kind of a slowdown on the top line, maybe your margins could come to single digits at some point as well in FY25?
No, Sonia, margin-wise, we are not really much worried. We don't expect the margin will come down to single digit now because the margin actually have held back, and actually now we'll start getting the benefit of the full price realizations also, and commodity price continue to be soft. So we had given a guidance the margin for tractor will continue to be in 13 to 14% range. We won't see it dipping down to single digit in this quarter or this year.
Mr. Madan, hi, good morning. Prashant here. So just to tie that number in, so last year, FY24, I think you were down 5%, which is better than the industry. You're saying single-digit degrowth this in FY25 as well, for the full year as well?
No. So I said only for the first quarter.
First quarter.
Yeah, because after that was post-monsoon, we expect the recovery should start happening. So from September
so low, mid, single-digit growth.
Overall it will be low single-digit growth for next year, full year.
Okay. And, so the elections, etc., you mentioned a few factors. How do you assess consumer sentiment as such? If you sort of keep away elections and monsoons are expected to be normal, I mean, how do you sort of assess consumer sentiment in the market right now, Mr. Madan?
I think we've seen some now sentiments have been improving, especially in pockets like Maharashtra. We've seen this time the volumes were good. The Gudi Padwa was festive season, so we saw good numbers coming in from Maharashtra. And we also improved our market share in Maharashtra. So I think that's a positive sign because the rainfall typically had impacted the southern and western market the most, which is what impacted the industry. So the stronger market in north and central was not really impacted to that extent. So we've seen good traction coming in from markets like Rajasthan, even UP, to some extent, and now Madhya Pradesh. So overall, I think the positivity is there, I think in certain pockets, but wherever the impacts were more because of the patchy monsoon last time, so there we'll see the recovery will start happening now.
All right. Good morning, Mr. Madan, and thanks a lot for joining in. This is Nigel on this side. I had a two-part question. You all had put out a midterm guidance, I think in 2022, towards the end out there. And one of the targets was to double your market share. But as I see, there's not too much movement on the market share. So could you tell us what it is and where is it headed? Point number one. And point number two, on the implements business, you all had guided that you're likely to see that triple. What was the updated number for FY24 on the implements business, which is a smaller part?
Sure. I think to the first question, I think one, we had given the midterm business plan, which is based on the consolidated entity. So as you know, there are two joint ventures with Kubota, which will get merged into Escorts now very soon. We're expecting the order to come from NCLT anytime within this quarter. So those two JVs have roughly, they do about 20,000 tractors out sale, and they're also very good in the implement side. And they're doing very good business on the harvester and transplanter, where the volume is almost 300 crores plus. So I think post-merger, we will have a market share of close to 12-13% combined entity, which is what we are looking at doubling. Obviously, one of the reasons is the slight delay in the product introduction and the new product development process. But I think the stabilization and integration is taking some time. And when that starts, we'll have all the white spaces filled in, for the new products, which will start coming in, in the market from this year itself, this year end. And then FY26, we'll see the full benefit coming in, from those product portfolios. So we'll see probably the moment and the market share will also start happening positively. So fortunately, in the last quarter, I think we've been able to gain 1% market share overall, especially in the stronger market. So which is a positive sign. And we expect with this, new products coming in, that will also really help us post-integration, the merger. Same thing on the implement space, like you mentioned, since the implement is a big business for the JVs, and post-consolidation, we expect that will be a good revenue driver for us going forward.
Okay, all right. Mr. Madan, just one more question from my end. In the past, there were some reports that suggested that you could be looking at selling the railway business. Is that on the cards?
No, it's all speculative. Actually, we denied that also to the stock exchanges. So there's no such news. Yes, we know Kubota is not really into the railway business globally. So there's not really a sector where they can add value. But that doesn't mean that it will be sold off. So obviously, we're looking at the right partner who can really help us in doing that business further.
Okay, so you're looking for a right partner to take that business further. Are you looking to tie up with anyone anytime soon in this calendar year? Should we look at any kind of strategic investor coming into the railway business?
So we already have multiple collaborations in that business for different product portfolios. So we're trying to expand that portfolio further now. Given the trending position from the government side, railway business is looking strong and it's showing very good growth, and we expect the similar growth momentum will continue this year too. So obviously it's the most profitable business for us right now.
Okay, so railways is the most profitable business. Got it. The construction business has also grown very well. I just want a number there, because in FY24, your volumes went up almost 42% in construction. Is this the kind of pace of growth that you're expecting in FY25 as well? And what is the order visibility that you have in this business?
No, we don't expect the growth will be to the extent of 40-odd% this year. But the industry has already touched a new peak last year. So even if the industry maintains at that level, I think it will be a very good number. We need to continue with, though we expect some growth will come in. But again, construction industry picks up after the monsoon season. So there again, we see the good growth will pick up actually post-September. Overall, the margin profile in the industry has really turned around. If you look at it, almost a double-digit margin in the last quarter for us. So which is almost touching now, catching up with the tractor business, in terms of margin profile. But it's a focus area for us, and we'll continue to add more products, and expand our portfolio in this segment.
Okay. All right, Mr. Madan, we'll leave it there. Good luck. Thank you very much for your time.